What does this sweet, harmless bell pepper have in common with this terrifyingly hot ghost pepper? And what do either of them have to do with your money, more than you think? In the next 3 minutes, we're going to uncover the single most important rule of investing, using nothing but chili peppers. Welcome to Financial Wisdom Animated. Today, we're talking about risk versus reward. There is virtually no risk of getting your mouth burned. This is the safest financial choice. Think of a high-yield savings account or a government bond. Your money is safe, secure, and insured. But what's the reward? It's very low. The interest you earn will barely keep up with inflation, if at all. The bell pepper won't burn you, but it won't give you any thrilling flavor either. It's a safe place to park your money, but not a way to grow it. One bite can be incredibly painful if you're not prepared. In the financial world, these are your highly speculative assets. Think of individual startup stocks, cryptocurrency, or any new unproven investment. It's the simple idea that in order to get a higher potential return on your money, you must accept a higher possibility of losing it. This is not investing, it's speculating. For most people, the ghost pepper is too hot to handle. You might have a base of reliable Jalapeños for growth, a side of safe bell peppers for stability, and maybe just maybe a tiny flake of ghost pepper for excitement, if you can afford to lose it. Understanding your own taste for risk is the first step to building a financial future that's right for you, and should only ever represent a tiny, tiny fraction of a portfolio, if any at all. Every investment decision you make will live somewhere on this scale. To make it easy, let's imagine your investment choices are like a chili pepper tasting menu, going from mild to dangerously spicy. Level 1. The bell pepper. Low risk, low reward. First up, the bell pepper. It's crunchy, it's healthy, but it has zero heat. But by taking on this moderate, manageable risk, you get the potential for much higher rewards over time. Historically, the stock market has provided strong returns for long-term investors. The Jalapeño adds real flavor and real growth potential to your financial meal. Level 2, the Jalapeño. Medium risk, medium reward. Now, let's add some spice. This is the Jalapeño. It has a noticeable kick. You can feel the heat, but for most people, it's enjoyable and manageable. This represents the core of most long-term investment portfolios. Think of broad market index funds like an S&P 500 fund, or a portfolio of well-established blue-chip stocks. Is there a risk? Absolutely. The market goes up and down, so your investment could lose value, especially in the short term. Level 3. The ghost pepper. High risk, high reward. All right, it's time for the ghost pepper. This is for the thrill seekers. The risk of getting burned is extreme. The potential for reward is massive. A small investment could multiply many times over. But the risk of losing your entire investment is just as massive. So, what's the right level of spice for you? There's no single answer. A smart investor builds a balanced meal. What's your financial pepper? Let us know in the comments.